The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. And let's check out where the markets are at right now. What's going on today? We got the S&P is currently flat on the day. We got the Russell up 2.4. We have the Nasdaq up 12.5. Dow currently down 7 points on the day. So a little mixed bag of results. Not a whole lot of activity going on. We got copper right now. It is pretty flat on the day. Gold's moving though, up $1.63. Up 21 bucks, up 1.63%. So about almost $22 on the day. Now just a couple ticks away. We got silver right now is also moving up huge, up 2.5% on the day. Natural gas down 1.95, basically down 2%. Oil along with it down $2.29. Monster move on oil today. With the inventory report, we'll be diving into that, looking at that here in a little bit. We got corn. And corn right now, checking that out. And let's see here. We got a move of, what do we got on corn here? It's like $3.75. That's almost a 1% move on corn. It's just a lower, price to move there. And then we got soybeans is currently down 2%, down 29 points. Euro dollar is currently up 44 pips on the day. Aussie dollar up only 5 pips on the day. Pound dollar currently down 3. Dollar franc is down 37. Dollar CAD's down 15, with the U.S. yen is currently down 32. Aussie yen down 8. Euro yen up 11. Pound yen down 49. And euro pound up 25 pips on the day. All right. So that gets us caught up where everything's at. One of the things I did want to go over, wanted to maybe spend a little time analyzing on the show today, is the oil inventory reports, talking about those, looking at those, seeing, what can we do when those are released, when they do come out. Looks like there's a change in the oil inventory report this week. There we go. Yeah, all right, we got it. So 6.2 million barrels. On an expectation of 2.1. Well, that's obviously a lot more supply, so therefore price drops. But what I wanted to do was maybe spend a moment and go through and just look at some of these reports on oil, check them out, and see what can we possibly do with oil on Nadex on inventory reports. There's obviously the ability to potentially straddle or strangle the report. But there's a lot of premium built in on that report as well. And so, like I said, let's just dive into it. Let's pull it up. Let's look at it. And so right now I just got a simple 5-minute chart on oil. And going there. Let's see. Let's look at that little gap in data right there. And just from the massive move. Well, let's break that down a little bit further. I just want to look at the report itself. And yeah, you can see it just started going nuts right on that report. And let's see, the most liquid, because I know we're right at rollover week. And so one of the things I'll do is I'll go in and I'll check it out. I'll look up over here at cmegroup.com. You can go down here, click on energy on oil right there. You can look at the quotes, and you'll see the volume. Right now, we still got the volume. It's starting to pick up in the May contract, so it'll be there by the end of the week, definitely for Monday. But we still got the major volume happening right now in the April contract, and a little bit of activity a little bit further out there. But that's where the main volume is. Some interesting volume right there in December 2014. But okay, so we know we got the right contract. We'll go ahead and let's check out some volume on with our analysis and add that in. So real simple. I don't know what platform you're using, but whatever you're using here, you can go in and just choose volume. So we'll put that on, And I'm going to go in and I'm going to back out my data to 5 minutes. I also don't want to load more data. I'm going to go in here and load like the last year, okay, of data on the chart, because I want to just sort of look at some ranges. What do we got? And maybe even check out maybe some expected movements. And I'll just go right now for the channels. We'll start with that. And over, say an hour. And let us see how oil does. This report does come out consistently at the same time each week. So the expected movement actually has sort of an interesting ability to help you see where that's at. And the problem we had here is a massive gap. But let's go and let's look at, really, that's the open of the bar. So that brings a highlight to my mind there. But yeah, that's the open of the bar right there. And so let's go in. Let me grab this screenshot for a second. And what I really want to look at over here is, that's an interesting scenario we just had right there. I'm going to add expected range. I'm also going to add it twice. And you'll see why here in just a moment. But one of those I'm going to leave it on the volume, but I'm going to change this over to volume. I'm going to let it stay on the 5 minutes. I just want to see how that volume's tallying up. Usually I look at 10. The only reason I'm doing this because we're at looking at a news release. And then I'm also going to go and I'm going to add some 60-minute bars on oil right here. Get that in there. Black it out, okay, on both of these. And change that up. And then now, I'm going to drag this. Pretty cool. You can actually click on an indicator and move it to a new panel, make its own panel. So I'm just going to drag it right there. And I'm going to update it to be on the 60-minute bars. So right here. Okay. And so what we can see, obviously, is it breaking out of its range by quite a bit, but maybe not as much as we think. We really need to look at that first tick that took place, because we had this massive report. And it looks like there's literally a gap in data. So I'll have to go back and see what I can do about that. Maybe I'll download. There's a couple ways to fix the problem. If you ever see an issue like that that Ninja has in place, that can be really helpful. So right here, you'll notice that there's just a massive gap in data. And so what can I do to fix that? So let me show you. This is actually sort of a, just a side note learning opportunity. But if you ever see that happen, you can go in and they have a data manager. And so I can go into historical data manager and I can say I want to go in and download the oil April contract today, which is the 12th. Okay? And I can say I want the tick data download. I can click that right there. It'll download that tick data. And once that data is in, theoretically, now again, this is theoretically, I have to go with that. I don't know if they've updated their server yet with the data. That's the one possible issue. But we'll see if they have or not. And it's not completely uncommon for that to happen. They have to fill it in, go back and pull the stuff, but I just want to look at it and see what kind of move we get right here. So I'm reconnecting now to the data feed. I've downloaded the tick data. Yeah, so they're still working on getting that piece put in there. And so I also always have two data providers. I want to see, is that accurate? What's going on? And so I'll go over here, and there's oil. Okay. Now we're going to back out. We're going to come down to 1 minute. And right there. Okay, so you can see it did open there. I want to make sure there wasn't like some weird gap. So it did actually open there. And so we just can't quite see the price. All right, so we got the move there. I'm going to go in, and now I'm going to add in my little tool box. There you go. That makes it easy to draw things. And so we're just going to measure from basically the high right there on down here. Got to move like $1.36. We usually get a move, it says, about 87 pips during this hour. Okay, that's our usual high to low move. And so the next thing I want to do is I want to go back and I just want to look at the dates that oil inventory has been released over the last year and how that's been working out. So we got 87 pips, and this is obviously a much larger move. One thing to note is, oil just really the last good chunk of the morning here, we were already exceeding it going into the hour. We were we were already starting to exceed expectations. And look at the volume. Okay, this right here again, this is volume on the 5 minutes, and there was a lot more volume activity happening. Again, I can change this to 10 minutes, just to show you sort of what I was going over yesterday. But just notice how much oil is exceeding the expected volume. And so there's a lot going on right there. Don't be surprised if you exceed expected volume, you also end up exceeding expected range. And just a reminder, when you do add on expected volume and you change it to the volume setting, it's very good. I didn't do it on this one. I need to change this just to volume. Okay, right there. And by doing that, by changing the label, then when you click OK, basically you'll have the name in there. You'll know what it is you're looking at. Versus right down here, I have high to low. So I could also change that one. And usually I have high to low, so I don't need to change the label. But if I'm adding in, volume and stuff as well, then it's pretty good to label each one of them so I know what is measuring what. So that's measuring volume. It's measuring it on 5-minute bars, or 10-minute bars in this case. And I know that because it's the default bar, but this one will actually tell me if it's different because see how it says 60 minutes on it. Okay, so we can go in here and just to do a quick little, news analysis is what we're going to try to accomplish. And we're going to accomplish, that's our goal today. And we're going to focus really on just oil itself. Okay? So on the oil inventory report, what we'll do is we'll go in and let me see here. I'm going to grab just the last 12 months. And in a second, I'll actually have to switch over to the continuous. I'll tell you why once that comes up. We're probably not going to go through all 12 months because, well, it's just not that long of a show. But we'll at least get a good chunk of days on there. And so I'm going to go in, I'm going to grab, let me see here if I can get all of this. March. Yeah, so this would be the last year of data. All right, so we'll be back right after this.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're new to TFNN, then you've probably heard some of our hosts and traders talk about the exciting charting program, The Art of Timing the Trade Charts. Tuesday, March 11th at 6:30 p.m., Dave White and Tom O'Brien will be hosting a live study session for anyone with a subscription to this exciting charting program. During this hour-long online workshop, Dave and Tom will lead a brief presentation along with taking questions from those that attend. Right now, we have a great deal for all new subscribers. You can sign up for the Art of Timing the Trade Charts and get your first entire month for only $1 while gaining access to this live event with Tom O'Brien and Dave White. For more information on how this exciting charting program works, you can click on the Charts button on the front page of TFNN.com today and check out some of the videos that walk you through a variety of the features included. Sign up now by taking advantage of this exciting offer for just $1 before it's too late. Visit TFNN.com today.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, and now let's go in and let's start looking at some numbers. We'll try to focus in on this year. Right here, so we got a movement, like I said, in this hour we got an expectation of 0.87 or 0.5 with a movement of 0.87. Okay, so that's just the first half hour, which this could be used for half-hour strangles. Okay, and one thing I look at when I look at charts is how much movement did I get after that? That really, the biggest move I got. On the total time of movement high to low, let's see here. I want to get the full thing. Got a $1.35 on that. I want to go over here and I want to measure just on Thinkorswim just because of the data issue in that first hour. And we'll go back. We'll get the expectation from the previous week here in a second. But right on the release. So notice how we had the release over here. Came out this morning and at 10:30. Right there, we actually got a decent little up move before the whole thing pulled back. See that right there? And then we got this big pullback, sort of a head fake on the report. So actually our move, if you want to go pre-release, the close right there was, 98.44? And we actually ran up first. So from 10:30 to 11. So we had a low on that report of 98.53 and a high of 98.96. So basically 43 Okay, ticks right there on the low to the high, and so we'll actually change that as a 0.43. Now we got more movement. If you keep counting, it's trying to like group those 2 hours together. That's why the number looks off. But now let's look at the 11 to 12 range. Okay, and now so that high was, and as long as we're looking at these right, because I know the hours are a little bit weird. There we go. Yeah. So 11. Okay, so right there we got a high of 98.96, and we take that down to a low pretty much on the hour. Okay, of 97.55. So again, 98.96 to right there, 97.59. And so pull out a little calculator. So I use my calculator all the time. You may not need to. I need to. Just to make sure I'm right. And so 98.96. And then drop it right down over here to the low, just to make sure I'm right. Sort of like those waiters, who want to make you, somehow they try to impress you by not writing down your order, because you always tip more if the waiter doesn't have to write down your order. And when really the entire thing you're thinking is like, I really hope you're as good as you think you are, and that you don't mess up my order. And when the order comes correctly, you don't think, oh wow, you were as good as you thought you are. No, it came correctly. You don't even remember that they didn't write it down. So write down your math, get it right, don't make the mistake. But that's sort of, like trying to do all the math without ever having to use a calculator. It's like, great, if you can. I can, but it's just not worth it. The waiter can not write down my order and can remember it, but it's just not worth it. So anyway, so there's our $1.37 number that we had from earlier. So right there. But it's, like I said, it's sort of jacking it up a little bit because that move. So we actually got a full $1.37 on the 1 hour move. Okay? And we'll come back on the expecteds here on that one in a second. Now let's go down to the, shouldn't have to do as much math on the other ones. But we'll go to March 15th. And like I said, I may need to go in and pull continuous here in a second. But March 5th, there we go. So March 5th, we got another, inventory release happening. So right here, taking place, and 10:30, 11:30 come on. Always make sure you got your time zones all lined up, because it sort of gets weird when time zones change. Your chart should take care of that for you. And so looking at this, we didn't really have, there's a little bit of a change, not a massive move. Again, I can always double check anything if I'm worried about accuracy. I can go in here and pull, like, say, a 30-minute chart. Going to look at, last Wednesday, and I love the double check stuff, just because, I've seen so many things that have been wrong on charts that it's good to verify. But yeah, it's like we got about a 90-pip move right there. So in the half hour. All right, we'll be back right after this break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, going back here to the Diagnostic Trading Hour. So we're digging on in. We're looking at the oil inventory reports. And right now, just going to try to catch up, get a few of the days of the year. As we put every piece together, and it'll be a lot easier. Let me grab my data box and I can just scroll real quick. All right, so next date on the roster here, we're going to March 5th. So, I'm jumping way too far. There we go. And so a little bit further back, we'll be right there, March 5th. Okay, there is our news release. And we got our expectation, like I said, 98 out of 65 pips. Didn't really see much of a move. We did see a big move. So big continuation pattern. You know, basically on the next hour. This one went flat. At least, 10 and 12. Got a little bit more of a continued downtrend. In both cases, it looks like, trend continues to end of day, basically to 2:30. So, which is end of day on oil, pit. So you can, of course, keep trading the, Globex there. Looking on over at, okay, those are both bearish, and they both continued down. One of them was massively bearish, so we actually got a little further move right there immediately in that first hour. The other one, it really, it did give us some more. It gave us another like 50 cents, but it just took a little bit longer to get there. It didn't get a whole lot more. Really, looking at it, really didn't get a whole lot more right to the end of the day. Okay, so Now, to help out with, I guess you could say accuracy, because oil rolls over on a consistent basis, we're going to go in here and we're going to go, now that we're past the current day, and we're going to look at the continuous contract. Okay, now that won't show us current day unless you're paying for that additional service tab, like the active, live, continuous, rollover, and that's like, a year back of data. But so it is possible to set that up. But right now we're just looking at. I'm going to check out my data series down here. Yeah, so we're using CL compound. Good. Okay, so it's using that across the board. That'll help me a little bit more, like I said, with the accuracy side. On putting it all together. And now let's go back. Let's look at the previous date. Okay, so you can see also like it was trend continuation in a day. Not much basically is what we got. So what I'm finding is that more often than not, we're getting most of that move in the first, really half hour. All right, so we're going to go back 26th of February. And you do have to make sure you get the right time. Usually you can see the right time just by looking at the chart. But remember, with daylight savings time, also there can be some weird things like holidays can push the times of the release to be a different time, to be later. As long as you get the right date, that ought to help clear up most issues for you. Sort of zooming back out on here. There we go, so I can actually see the bars. And I'm using Alt up and down. That's a quick key on this that's helpful. We'll see, expected 60, basically about 68, actual 75. Okay. And then, so we get 68, and then actual, 75 pips. All right, and then I also noticed that it made that move and pretty much stayed up for, most of the day. So, but we didn't really get much additional movement. But so pretty, flat. Maybe I'm going to drop my range because it was flat. And trend stayed with movement. There we go. So again, just sort of noticing, what is the pattern? When am I getting my move, my big move on this? I mean, pop, I got it again right there in the next hour, but I got it right after the release. Okay? I can keep going back. We'll look at the 20th. Okay. And let's see here. A little too far. There we go. There's the 20th. And oh no, we're on the 21st. Okay, there we go. And you can see, there's the movement right there. Movement we got was a 64, expected 44. Okay. So that was a lower than expected move. Not a real big move right there. And the things I'll start looking at is I'll start going, well, when it's bearish, what does it do? When it's bullish, what does it do? When it deviates by how much? Like here's the deviation between the expected and the actual. What kind of input does that have? So all these different pieces. Also, I want to note on this one, like it, so that's flat afterwards, but, after movement, we'll put that. But then also I want to put, basically was an up move, a down move, up move, up, down, or, chop. Like that right there, that's pretty much a chop move. So here we had, when it was bearish, the market went down, But this then the last one, the market went up. And then this one we had chop, right? So the market basically went down like 20, went up like 20. Not a whole lot happened. And it really chopped into the end of the day. It was flat on chop into the end of the day on that report. And this is a tedious process, I'll tell you that. But when you go through it, then the oil inventory report. The different reports. And so I'll go through and a lot of times I focus on FX just because they happen. You get bigger moves, more consistent moves. The premium's not as high. But remember, what I'm starting to do now is I'm really starting to embrace, these iron condors. And so I think there's a high possibility that I may be looking at using them in the future for doing oil inventory. Whereas before I was trying to do them with straddles, strangles weren't really working out as well on a consistent basis. So the data I need to collect needs to let me know, would this have been a good, consistent, profitable trade for me to have done. And let's see here. So on the 12th of February, it's like the trade, like nothing had happened. It didn't even matter. We really didn't see any kind of a big move at all on oil inventory. And he'll say like 11:30. That's really 10:30. Okay. So you can see where the high volume bar is. And so make sure you are putting that into effect. But it looks like we got a expected move of 67 with an actual of 53. So sort of staying in that expected move territory. Again, I could easily classify this one as, chop and, flat to down. I guess you could say down. Flat, then down. So, and that was bearish. So the market did finally go down by the end of the day. It just sort of chopped around, sort of shot down, came back up, and then went on back down into the end of the trading day on oil there. So it went with the fundamental. So again, that's another thing I'm looking at is, how much does it actually go with the fundamental release? All right, so let's go check out the February 5th release. And again, don't forget, like it can easily, when you're doing this backtesting stuff, can mess you up. If you're not thinking about daylight savings time and everything, the easiest thing to verify that you have the right one is just look at the volume bar. You'll know, okay? You'll know when the release happened. Just by looking at volume all by itself, you'll be able to tell. And let's see here, February 5th. Okay. And it's trying to get that data. Okay, a little bit further back. Here we go. All right, February 5th. I mean, there's the high volume bar. You know that's when it happened. Okay, we had an expectation of 73. We got 80. We got 80 pips. The news there we can see came out as bullish. Market pulled down on, despite being bullish, in the sense of, there was a lower supply, therefore expected raise in price. Price popped down, came back up to pretty much flatten out. If you look at pre-release to, pretty much closing out at the end of the day, we really, look at that right there. We'll go to pre-release. So right there, we basically ended at the exact same price level. So that should wrap that up one, but what we'll do is we'll put flat on that one. Okay. So type in flat, and then we'll put flat to end of day. Really, we got some bearish movement on it. I could also put flat, had bearish move, return to flat. Just to let me know, how is the market reacting over and over again. And is there a consistency? Sometimes you'll have more consistency on the bearish side a lot of times than you will on the bullish side. It's interesting to find out how that works out. But you have to look at, it's the exact same report, the exact same time of day usually, but at least the same report on the exact same instrument, and just piece by piece looking at how to put it all together. All right, so we're going to try to wrap up this year here. We're going down to January 29th. That's our next date. If we can just do current year, we won't do 1 year data, but if we can get just the current year, and then you'll know sort of how to take it from there. But January 29th, and I'm getting just the basic fundamental data, the forecast. I'm just grabbing that off Forex Factory. So, but let's see, right here, okay, we got the 29th. And obviously there's our high volume bars happening right there. Had a big shot down, then a shot up. Expectation was 73 and moved $1. All right. Okay. And really, it obviously was bullish. It went up in this case. So the market definitely, shot down, shot up, flattened out, then ended up in last half hour. Okay. So it did go with the fundamental right at the shock, but then it bounced back. It was sort of a chop hour almost. Maybe a little bit higher. But, and the reason I say that is, hey, we got 100 pips on it, but if we go measure, what really happened on that 100 pips, look at this right here. We got pre-release to high. We got like 67. We got pre-release to, low at about 40. So we had a lot of up and a lot of down move. So I can even say, 0.63 was up on that, just so I can, measure that. That was a big enough chop that, if you did have a straddle on or something, you could have still taken advantage of it. And let's see here. We'll go on over to the 23rd. Just a couple more dates left in this, but this is, just trying to sort of show you the process. On the 23rd here, we're going in and now looking at the release right there. So it looks a little off, doesn't it? So let's see that release. Okay, that was a 12 o'clock release. So it was a later release, which would be 11 o'clock, just like I said, daylight savings time going on there. Okay, expectation. Now, notice how the expectation wasn't too much different on these two right here. We've been getting lower moves. But we also moved into a new hour. Okay? So this is going to mess up your expectations a little bit because some of this movement is happening in the next hour, where some of this movement is happening in the previous hour. The only way to get around that would be to like do 120 minutes to get the total combined expected move. All right, so but looking at that, what do we got? We have a expectation on movement of 40 with 96. So 0.40 with 0.96. And now let's, then what did it do? We got a up move that went pretty much up right to the end of the day. It actually fell off, but it wasn't until it was right at the close. So it was an up move, even on a bullish report, okay? Or on a bearish report. So up move, and then up move, then flat, and flat till end of day, then dropped back all the way to pre-release. Okay? And some of this is like, well, how is that any pattern? How can you use that? What's that going to do for you? Well, you'll start seeing, part of what you're going to start seeing is what's the actual move when this report comes out. When you start seeing what that actual move is, then you actually start having an actual expectation of what could work for a trade. We got the next trade January 5th. Okay, so let's take that back on to our January 15th. All right, so right here, January 15th. Okay, there we go. And like I said, we'll wrap up like two more of these, and then we'll have the we'll have the year's results after two more reports. Right there. Be back right after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, come on back here to the Diagnostic Trading Hour. And, all right, so this sort of, look at, this is just current, this is just this year. So we go grab the last year of reports, but that's a good start. And it does tell us a few things, okay? So let's see what it tells us. All right, on average, we expect the market to move about 62 pips. So that's been the average of the expectation of the last 10 weeks or so here. But it's exceeded that expectation. But we've had an average move of about 75 pips. All right, and then it looks like we got 1, 2, 3, 4, 5, 6, 7 of those reports actually exceeded the 75 pips. And let's see here, out of what? How many reports do we got there? We have 11 reports, so 7 exceeded. All right, 75 pips. We had 11 reports, and I want to say, well, we had like 1 report that was like right there at the 75. We had 1, 2, 3. Okay, we'll just say 3 less than 1, at like 71 pips. So we may even go in here and just say 8 exceeded 70. It might be a little easier. Okay? And then the other 3 ranged from 45 to 53 to 53 pips. Pretty simple. Okay, so basically, not bad, not a bad ratio there. Wrong number, but that should be a little over 70. There we go. So basically 70 to 73% of the time, it is exceeding 70 pips. All right? It's, the average move is 75. Obviously, it moves like 96 cents and a dollar and 90 cents and 80 cents. It's bringing that average up. But so 73% of the time, it's exceeding 70 pips. And that's what I'm interested in. Okay? And so I can look at that and go, okay, now what does it cost me to do, like an iron condor? Or what does it cost me to do a straddle or a strangle on a trade? And how much can I receive? I mean, what if I can receive $1? Well, only one time did it even hit $1. What if I can receive 90 cents? Well, let's see. 1, 2, 3 times did it break 90 cents, and only by maybe 20 cents did it break it. So I can use that information now for next week, and I can pull up the different ones, or I can even look at the ones for this week and pull up the charts on them. And working on actually building. We're putting together a historical chart engine right now, which is looking pretty sweet. Where we can start looking at historical spread charts for testing and back testing. They're already auto plotting and drawing, and one of our team members is putting that together. And let's see here. But if I can go in, I can pull up the spreads on the commodities. And let's see here. So we'll pull up crude oil. I'll pull up the 230 because I got to have one that's pre-release. And then, open the charts up. You can tear those off. And use those. So we can go back and basically we can analyze them. There's a lot of different ways to analyze them. And we'll have to do that on a different day. But hopefully you're starting to see the idea behind the news trades, what's going into it. Like, hey, this is how often it's breaking it. This is the kind of move we're expecting. 70 pips. Average move is 75 pips. Obviously it's breaking 50 pips 80% of the time. So you'll hear me say stats like that. That's where it's coming from to help develop that news trading plan. All right. We'll be back right after this.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.